A very good morning to all the participants of this webinar. And I'm Arvind Mishra, Deputy Director, welcoming you to the DTRTI Lucknow webinars. Today, that is on 2nd of November 2020, we are presenting to you part 4 of depreciation accounting. And we will begin with change in the method of depreciation. Now, we have already studied the various methods of depreciation which are used in varying situations. Now, what may happen at some times that if the pattern of consumption of the economic benefits of any asset undergo a change, or if we say that if an asset is utilized, the utilization of the asset or the pattern of utilization of the asset in the business of the business person or an entity undergoes a change, then it may sometimes lead to a situation where we may need to change the method of depreciation. So the method of depreciation which is applied to any asset needs to be reviewed at least at each financial year end, so that for that financial year we are sure about the correct method of depreciation being applied, because our ultimate aim is to get a true and fair picture of our business. And if we are not applying the correct method of depreciation, then we may go far away from the accuracy that is required in calculation of the depreciation or in accounting for the amount of depreciation that needs to be entered in the books of accounts. So whenever any change in the depreciation method is made, so such change will be treated as change in the accounting estimate as per the accounting standards. Therefore, it will be needed to quantify the change that is coming due to the change in the method of depreciation. It will be needed to be disclosed in the books of accounts that we have changed the method of depreciation, and by that we have changed the accounting estimate. Now, this change in the accounting estimate can affect the current period only, or it may affect the future periods also. That is why it is important to review the method of depreciation at every financial year end. For example, if there is a machine which has cost 10,50,000 rupees, and at the end of the useful year of 10 years, its residual value will be 50,000 rupees in our estimate, and the company is charging depreciation on straight line method for the first 2 years, and after the end of first 2 years the company decides that it will adopt the written down value method and charge a depreciation at the rate of 25%, which is calculated based on the useful life. So if we are required to calculate the depreciation for the third year, now what is to be done is the depreciation which is already charged for the first 2 years as per straight line method is 2 lakh rupees. Why it is 2 lakh rupees? because we reduce this 50,000 from 10 lakh 50,000 and we get 10 lakh rupees. And this 10 lakh rupees we divide by the useful life, which is 10 years. So we get 1 lakh rupees per year of depreciation. And therefore, for 2 years, we have already allowed or applied 2 lakh rupees depreciation under the straight line method. So therefore, now we will see what is the WDV or the written down value for second year. We have already charged depreciation by the straight line method of 2 lakh rupees. So initial cost was 10 lakh 50,000 rupees. When we reduce this 2 lakh depreciation from 10 lakh 50,000 rupees, we get a value of 8 lakh 50,000 rupees, which is the WDV after applying the depreciation for the second year. Therefore, in the profit and loss account of the third year, we will have to apply the depreciation at the rate of 25% of 8 lakh 50,000, which comes to 2 lakh 12,500. And therefore, for third year, we will allow depreciation of 2 lakh 12,500 and not a depreciation of 1 lakh as we were allowing so far. So that is how when we change the method of depreciation based on the change in the expected pattern of the consumption of the future economic benefits which are in the asset. Every asset is carrying economic benefits because that asset will be used for the business and it will generate the profits. It will generate the economic benefits. Now, whatever economic benefits that asset is producing, if the expected pattern of consumption of those future economic benefits is changing, let us say that we have started using the asset more frequently. Let us say a machine was being used in only one shift, now it is being used in 2 shifts or 3 shifts. Maybe the useful life has changed, maybe the residual value has changed. Maybe the business of the assessee has undergone a change, which necessitates a change in the method of depreciation. Whatever has happened, and it needs to be reviewed at the end of every financial year, that do we need a change in the method of depreciation? And if the answer is yes, then we need to change the method of depreciation and accordingly recalculate the depreciation for that year, as we have seen in this example also. Now let us take another illustration. Messrs. Anshul, they started business on 1st of January 2011 and they purchased the plant and equipment for rupees 7 lakh. Now they adopted initially a policy of charging depreciation on diminishing balance basis at 15% rate per annum. And after that, over the years, they made some more purchases of the plant. For example, after 1 year, on 1/1/2012, they purchased 1,50,000 rupees plant. And on 1/1/2015, again they purchased 2 lakh rupees of a plant. So initially they had purchased on 1st January 2011, 7 lakh rupees of plant and equipment. Now thereafter, on 1/1/2015, it was decided to change the method and the rate of depreciation towards straight line basis. So far they were going on the diminishing balance basis and they thought that they should go for straight line basis. And this decision was taken on 1/1/2015. Now on this date, the remaining useful life was assessed as 6 years. So on 1/1/2015, it was thought that the remaining useful life is 6 years. for all the assets which were purchased before 1/1/2015 and 10 years for the asset purchased on 1/1/2015. So the asset which was purchased on 1/1/2015 for 2 lakh rupees, for this it was decided that the useful life was 10 years from 1/1/2015 onwards. And for all the other assets, like the assets which were purchased on 1/1/2012 and the assets which were purchased on 1/1/2011, it was estimated that their remaining useful life was 6 years. And it was also estimated that there will be no scrap value at the end of it. Now we have to calculate the difference in the depreciation to be adjusted in the plant and equipment account for the year ending 31st December 2015. So what we have to do is that we have to calculate the depreciation for the financial year 2015 ending on 31st December 2015, and then calculate the difference in the depreciation which will need to be adjusted for this year. So therefore, let us start calculating the depreciation. Now, on 1/1/2011, this plant was purchased for 7 lakh rupees, and on the written down value basis, depreciation was allowed at the rate of 15%. So 15% of 7 lakh rupees is 1,05,000 rupees. So after allowing this depreciation of 15%, we get a written down value of 5,95,000 rupees, and we are going on writing the depreciation here on the right side column. Thereafter, on 1 January 2012, now coming to financial year ending 2012, we have purchased a plant for 1,50,000 rupees during this year on January 1st, and for the whole year depreciation has to be provided because this plant was purchased in the beginning of the year itself. So therefore, we have to allow 15% depreciation here also. So 15% of 1,50,000 is 22,500. We allow this depreciation of 22,500 on this plant, and we allow a depreciation on this 5,95,000 also. So 15% of 5,95,000 is 89,250. Having allowed this depreciation, we get the written down value of 5,05,750 in case of this plant and equipment purchased on 1st January 2011, and we get a written down value of 1,27,500 rupees on the plant purchased on 1/1/2012. We add up these two depreciations for 2012 and we get 1,11,750 depreciation allowed for year ending 2012. Then for 2013, again we take 15% of 5,05,750 and we get a depreciation of 75,863, and on the other plant we again take 15% and that is 19,125, 15% of 1,27,500, and thereby we get a depreciation of 19,125, and we add up these two depreciations and we get 94,988 depreciation for year ending 2013. Now we move to 2014. In 2014, no fresh purchase is being made and therefore 15% depreciation is being allowed on both plants. And total of the depreciation is 80,739 and WDV is respectively taken by reducing the depreciation from the WDV of the earlier year. Now we come to 2015. We come to 2015 and for the year ending 2015, we again take 15% and 15% here also, and we add up these two, 76,253, and the WDV are respectively calculated. Now, however, we have noted that though this is the depreciation on plant 1 and plant 2, however, what we have done is that on 1/1/2015, we have again purchased a plant of 2 lakh for 2 lakh rupees. And when we purchased this plant on 1/1/2015, we changed the method of depreciation from 1/1/2015 itself. If we had not changed the method on 1/1/2015, then what would have happened? And if we have changed the method on 1/1/2015, then what has happened? We have to understand that. So if we have not changed the method on 1/1/2015, depreciation for the year ending 2015 would be 76,253 for plant 1 and plant 2. And of course, since we have already changed the method of depreciation for plant 3, we are not taking plant 3 into consideration here. Now what we do is that on January 1, 2015, we are having a balance of WDV, as we are seeing here. If we add up these two amounts, 3,65,404, and we add up 92,119, we get a value of 4,57,523. This is the WDV as on 1st January 2015 brought down. Now for the year 2015 ending 2015 31st December, we have a depreciation on the plant 1 and plant 2 of 76,253, which is an addition of 60,900 and 15,353. So if we add 60,900 to 15,353, and thereafter we calculate a depreciation on the new plant which was purchased during the year. As you can see here, the plant is purchased by debiting the plant and equipment account for 2 lakh rupees and crediting the bank account. Now in this case of 2 lakh rupees, what is the depreciation that we are taking? We are taking a depreciation of 20,000 rupees. Now for this, in the respect of this 20,000 rupees, what we are saying is that the asset which was purchased for 2 lakh rupees, its useful life is 10 years. So since its useful life is 10 years, we divide this 2 lakh rupees by 10 and we get a value of 20,000 rupees by straight line method, because we have already changed to straight line method. So we are allowing we are using straight line method here. So for other two assets which were purchased on 1/1/2012 and for the assets which were purchased on 1/1/2011, we have come to the conclusion that they will be working for another 6 years, that's all. And there will be no scrap value. So whatever WDV we are having in case of the assets which were purchased in 1/1/2012 and 1/1/2011, whatever WDV we are having as on 1/1/2015, we'll have to apply a straight line method of depreciation for 6 years on that. So let us see here what is happening. Now supposing we apply the WDV method for 2015, we get a depreciation of 76,253. And for the straight line method for the third asset, we get a depreciation of 20,000 rupees by applying the straight line method here. So therefore, a total depreciation will be 96,253. So what we are trying to say here is that we have already taken a decision to apply the WDV method in the case of, because we are already applying WDV method in the case of the other items. If we change over to straight line method here, we have a WDV of 4,57,523. Now on this WDV of 4,57,523, if we say that this will last for 6 years only and we have to change to the straight line method, we will need to divide this thing by 6. And therefore, we'll divide 4,57,523 by 6, and that will give us the depreciation on plant 1 and 2 on a straight line basis for plant 1 and 2. And we'll get a depreciation of 20,000 rupees for plant 3, which was purchased for 2 lakh rupees on 1/1/2015. And therefore, the depreciation for the year ending 2015 would be 1/6 of 4,57,523 plus 20,000 rupees. And that will be getting on the basis of the straight line method. So we'll have to allow the depreciation on the straight line method basis in this way for the year 2015, because we have already taken a decision on 1/1/2015 itself to change the method of depreciation. So as it is written in the question that on 1/1/2015 it was decided to change the method and the rate of depreciation to straight line basis. So therefore, and on this date the remaining useful life was assessed as 6 years for the other assets. So as the remaining useful life has been reassessed as 6 years, and earlier the useful life was assessed to be was assessed on the basis of the written down value method, and we were just allowing 15% per annum. So if we allow 15% per annum every year, we come to a depreciation till the year 2014 end, and then for 2015 we have changed to straight line basis. So since for 2015 we have changed to straight line basis, we'll have to take into account the WDV as on 1/1/2015, and then take the new useful life remaining estimate and divide that WDV by 6 years to get the new depreciation on plant 1 and 2. So the new depreciation on plant 1 and 2 added to the depreciation on plant 3 will be the depreciation that will be actually charged in this case. So therefore, we have to change this account here, and we have to say that we have to take 1/6 of 4,57,523. And if we were to take 1/6 of 4,57,523, let us go to the calculator and take 1/6 of that. So we start the calculator. And I hope that you can see my calculator also here. So we take 4,57,523. This is the 7523. This is the WDV as on 1/1/2015, and we divide that by 6 years, which is the useful life estimated. We get a value of 76,253. So actually, it is 76,253. Here also you can see this 76,253. Okay. So even if we were going by WDV method, the value was same 76,253. Again, the value is same 76,253. But what we are doing here is that we have shifted to the straight line method. Even if we have shifted to the straight line method, we are getting the same value of 76,253. And to 76,253, we are adding the 20,000 depreciation on the third plant, which is purchased on 1/1/2015. And therefore, we are getting a value of 96,253. So if the question is asked here, what will be the adjustment of the depreciation? The adjustment of depreciation in this case is 0, because we are getting the same value of depreciation, so there is no adjustment required here. Now we go to the next topic, which is called revision of the estimated useful life of property, plant and equipment. The residual value and the useful life. Residual value or the scrap value or the salvage value, whatever word may be used for it, and the useful life of an asset, these two items should be also reviewed every financial year end. So just as we are reviewing our method of depreciation at the end of every year, we should also be reviewing the estimate of the residual value and the estimate of the useful life of an asset at each financial year end. And if our expectations differ from the estimates that we did previously, we should account for this change as a change in an accounting estimate in accordance with the accounting standards. If we will go through the accounting standards for depreciation, there they are writing that whenever there is an accounting estimate change, that must be accounted for and disclosed. Therefore, since that is the requirement of the accounting standards also, if at any time we are re-estimating our residual value and useful life, and this has to be done every year, at least every year, so we can do it even before that. As soon as we know that residual value and the useful life has changed, from that date onwards, we can recalculate the depreciation. So whenever there is a revision in the estimated useful life of the asset, whatever amount which is of the depreciable amount, which is unamortized, depreciable amount means cost of purchase, cost of acquisition minus the scrap value or the residual value at the end of the useful life. So every year certain amount is being amortized, means a certain amount is being already included under the depreciation account. So whatever has not been included in depreciation, which is called the unamortized depreciable amount, will be taken now as soon as the estimated useful life is revised, and on this remaining revised estimated useful life, the unamortized depreciable amount will be charged towards depreciation. So a new depreciation amount will be recalculated as soon as there is a change in the estimated useful life or there is a change in the estimated residual value. So let's take an illustration of that. And you must keep in mind that we are saying that whenever this residual value and useful life should be reviewed at least means at least at the financial year end, but it can be done before that also. So you must keep in mind that as soon as at any time we find that certain circumstances have happened, due to those circumstances, the residual value has changed or the useful life estimate has changed, we must switch our calculation, we must redo our calculation of the depreciation from that date onwards on the unamortized depreciable amount, and charge this new depreciation from that date. Now, illustration 12 says that a machine which was costing rupees 6 lakh is depreciated on the straight line basis, assuming that 10 years working life was there and there is nil residual value, and taking all these considerations, the machine is depreciated for 3 years initially. Now, after this 3 years, the estimate of the remaining useful life was reassessed, and now it was thought that the remaining useful life is 5 years only. Initially, it was supposed to be 10 years. After 3 years, it should have been 7 years more. But after 3 years, it was reassessed and it was found that no, instead of 7 years, now the remaining useful life of the asset is only 5 years. So we have to calculate the depreciation for the 4th year. Now here straight line basis method is being done. So first of all, we have to see what is the depreciation per year that was charged on the straight line basis. So here there is a nil residual value. So we just divide 6 lakh by 10 and we get 60,000 depreciation, because we don't need to reduce anything from 6 lakh in terms of the residual value. So we get depreciation of 60,000. 60,000 rupees depreciation was charged for first 3 years. So 60,000 into 3 it gives us a total depreciation that was charged on straight line method. SLM means straight line method. For 3 years, 1,80,000 rupees depreciation was charged, and after charging this depreciation, the remaining book value of the computer or the machine, whatever it is, they are writing book value of the computer. So here it is machine. So maybe this machine is nothing but the computer. So the book value of the machine at the end of the 3rd year is now 6 lakh minus the depreciation which was charged. So it is 4,20,000 rupees. Now on this WDV, so to say, the remaining useful life is recomputed for 5 years instead of 7 years. So now we have to divide 4,20,000 rupees by 5 instead of by 7. When we divide by 5, we get a depreciation of 84,000 rupees. So we see that from 4th year onwards, the depreciation has increased from 60,000 rupees to 84,000 rupees per annum. Now let us see, if the property, plant and equipment itself gets revalued, then what is going to happen? If there is an upward revision in the value of the asset for the first time, then the amount of appreciation is debited to the asset account and credited to the revaluation reserve account, which means that we are revaluing the asset, and the asset WDV is going up by the revalued amount, and the upward revision in the value is simultaneously credited to the revaluation reserve account, which is placed on the liability side. So therefore, both sides of the balance sheet go up by the upward revision in the value of the asset. On the liability side, that upward revision is put into the revaluation reserve account by crediting the revaluation reserve account, and on the asset side, it is put by debiting the asset account. Now, if there is a downward revision in the value of the asset, then what we do is that we just debit the profit and loss account by the downward revision, because we are taking this loss into consideration. You know, the prudence principle says that we should not jump over the profits, but as far as losses are concerned, we should be quick to realize the losses. So here what we are doing, the conservative principle, what we are doing is that whenever there is a profit, that is, there is a increase or appreciation in the value of the asset, that appreciation we don't credit to the profit and loss account, we credit it to the revaluation reserve account, we keep it as a reserve. But where there is a loss, we straight away debit it to the profit and loss account, and we credit the asset account because there is asset value has reduced. Now, if an asset was earlier revalued downward and later on revalued upward, then the appreciation to the extent of the earlier downfall is credited to the profit and loss account. Now, what is being done here is that supposing an asset was revalued downward. So if we have revalued an asset downward earlier, we have definitely debited that to the profit and loss account and credited the asset account. But now we are, since revaluing it upward, whatever we had revalued downward, we are revaluing the same thing upward. So the appreciation to the extent of the earlier downfall, whatever we had debited to profit and loss account, to that extent we'll credit the profit and loss account again, but the remaining amount will put in the revaluation reserve account. On the other hand, if the asset was earlier revalued upward and then later on it was revalued downward, then whatever downfall is happening, then the downfall to the extent of the earlier appreciation will be debited to revaluation reserve account. Here, this is an example where the downfall is not being debited to the profit and loss account because we have revalued upward earlier, and while revaluing upward earlier, we have credited the revaluation reserve account. If we are revaluing downwards to the extent of the same extent of the valuation of the upward valuation that was done earlier, to that extent, while devaluing the asset later on, will be debiting the revaluation reserve account, and beyond that, if there is a revision downward, then we'll debit that to the profit and loss account. Now, in case the revaluation has a material effect on the amount of depreciation, that will have to be disclosed separately in the year the revaluation is carried out. So this amount of depreciation change due to the revaluation of the asset needs to be disclosed separately in that year in which the revaluation happens. So all this that we have discussed just now is given in the form, the flow chart here. So revaluation can be upward or it can be downward. If the revaluation is upward, we are crediting it to the revaluation surplus or revaluation surplus reserve. When the revaluation is upward, there is also an exception when it is subsequent increase. If it is first increase, then it will be credited to the revaluation reserve account or revaluation surplus account. If it is a subsequent increase and earlier a downfall was there, initially it was decreased, then it is recognized in the statement of profit and loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in the statement of the profit and loss, which means thereby that if there was an initial decrease, we are debited to the profit and loss account, and thereafter, if there is an increase, so to the extent of the earlier decrease, it will be credited back to the profit and loss account instead of the revaluation reserve account, and the remaining will be credited to the revaluation reserve account. We already discussed this while reading this paragraph. Just a very careful reading of this paragraph gives us this chart straight away. So to understand this chart, please go through the earlier 2 minutes of this recording and you will understand this chart very clearly. Now, let's take an illustration for this. There was a machine which was costing 12 lakh rupees, and this was depreciated on the straight line basis, assuming that the machine's working life or useful life is 10 years, and it was assumed that there is a zero residual value after these 10 years, and so in this manner this machine was depreciated for 3 years on the straight line basis. Now at the end of the third year, this machine is being revalued upward by 60,000 rupees, and the remaining useful life was reassessed at 9 years. So we have to calculate the depreciation for the fourth year. So first of all, we'll come from the first year and come to the third year, and then we'll calculate for the fourth year. So for the first 3 years, the depreciation on the straight line method will be 12 lakh upon 10. The 12 lakh was the cost of acquisition minus nil residual value upon divided by 10. That is 1,20,000 rupees. 1,20,000 rupees per year gives us 3,60,000 rupees for 3 years, and we minus 3,60,000 rupees from 12 lakh rupees cost of acquisition, and we get a WDV at the end of the third year of 8,40,000 rupees here. Now on this WDV, we are revaluing the machine upward by 60,000. So we revalue it upward by 60,000. We come to a WDV of 9 lakh rupees. And we are also reassessing the useful life also. We are saying instead of 7 more years remaining, it should be 9 years. And therefore we apply the 9 years useful life on this 9 lakh WDV now. And we divide that 9 lakh by 9 years, and we get a depreciation of 1 lakh rupees for the fourth year. So fourth year depreciation would be now 1 lakh rupees as against the depreciation that was being charged at 1,20,000 rupees for the first 3 years. Now let's understand that every machine needs some repairs and renewals. So we need to accumulate some money for carrying out the repairs and renewals of the machine. Why we are creating this provision? Because we don't create this provision by debiting the profit and loss account, then we will get an overestimate of our profits, because we won't account for the repair and renewal expenditure that we will need to do in the future. So therefore we need to accumulate funds, we need to accumulate provisions for repair and renewal of our machinery, plant, property and equipment. So whatever expenditure we are incurring for repair, renewal or maintenance of the plant and machinery, this expenditure may not be a fixed expenditure. Initially, normally during the working life of any machine, we don't have to spend that much, but as we progress in terms of time later on, the expenditure incurred keeps on shooting up for repair, renewal and maintenance. Thus, for equalizing the charge of repairs and renewals, because we are initially we are spending less and later on we are spending more, in order to make adequate provision for doing these repairs and renewals and for equalizing the charge of expenditure on repair and renewal, sometimes what we do is that we create a provision for repair and renewal account is in the books of accounts. How do we create the provision? We debit the profit and loss account and credit the provision account, or credit the provision for repair and renewal account. The total of such expenses that may be incurred over the working life is estimated beforehand. We estimate the repair expenses, the renewal expenses, and we take an average of that expenditure and we debit that to the profit and loss account. We credit the provision for repair and renewal account, irrespective of the fact whatever actual expenses have been incurred. This provision is not created on the basis of actual expenses, rather it is created on the basis of an estimate. Now, every year, provision for repair and renewal account is debited and repair account is credited for actual expenses. When the actual expenses happen, then we debit the provision account, we reduce the provisions, and we credit the repairs account. So whatever repairs we have, in this method, we are not debiting the repairs account when we are doing the repairs. Rather, we are debiting the profit and loss account with the, what we can do is we can also debit the profit and loss account by debiting the repair account and crediting the provision account, and therefore thereafter when the actual repair happens, then we credit the repair account and debit the provision for repair and renewal account. On the other hand, what we can do is we can straight away debit the profit and loss account and credit the provision account for creating the provision, and once the repair actually happens, we debit the provision account and we credit the repair account for the actual expenses incurred. So the balance in the provision for repair and renewal account is carried forward to the next year, and in the end or on the sale of the asset, when the asset is sold, the account is closed by transfer to the asset account. Whatever the balance is there in the provision account, that is transferred to the asset account once the asset is sold. So what we are doing here is that to debit the profit and loss account, what we do is that we debit the repair account, and that repair account will be debiting into the profit and loss account later on. So we debit the repair account and we credit the provision account for creating provision. And when actual repair happens, we credit the repair account, we debit the provision account, thereby reducing the provision. And when the asset is sold finally, we debit the provision account and we credit the asset account with the account balance that is remaining in the provision account, because we don't need the provision now once that asset is sold, and therefore we have to make the final estimate of the profits on the sale of the assets, etc. So finally we take this provision back to the asset account and we adjust it over there. So let us take an illustration to understand this. Now there is a public company, and in the books of the public company, which is having a large fleet of vehicles, some particulars are available to us, that we are having a balance in the provision for repair and renewal account as on 31/3/2016 of 11,50,000 rupees. So after this, actual repairs were incurred during the year ended 31/3/2016 at 7,50,000, and for next year again 3,20,000 actual repairs have happened. The company already has a provision of 11,50,000 rupees, and it is making an annual provision of 4 lakh rupees every year also. So we'll drop the provision for repair and renewal account for the years 2015-16 and 2016-17. So as on 1/4/2015, or rather as on 31, we have 11,50,000 rupees, as you can see, for the year 2015-16, a balance carried down at the end of the year. As on 31/3/2016, at the end of the year, the balance carried down of the provision is 11,50,000 rupees. This is not a balance brought down. This is a balance carried down, because this is a balance of end of the financial year. So therefore, we write this 11,50,000 rupees as the balance carried down, and this is a credit balance written on the debit side at the end of the year. And thereafter, we are writing that during this year we carry out repairs also. So when we carry out actual repairs of 7,50,000 rupees, which is mentioned here, we have already seen that when we carry out actual repairs, we credit the repairs account and we debit the provision for repair and renewal account by the actual repairs. And every year we are making a provision, so we create a provision of 4 lakh rupees by crediting the provision for repair and renewal account by 4 lakh rupees and debiting the profit and loss account. This debiting of the profit and loss account is done normally at the end of the year to create the provision. So we don't need to take it through the repairs account in that case. We just do an appropriation at the end of the year towards the provision. So we are debiting the profit and loss account by 4 lakh rupees and crediting the provision for repair and renewal account by 4 lakh rupees for the yearly provision that is being created here. And after that, whatever is the balance remaining can be calculated, which was the balance brought down at the beginning of the year, because we already have the balance carried down at the end of the year. So the beginning of the year balance is shown by a difference of the debit side and the credit side by using a balancing figure. Balancing figure means we are reducing this, we are adding this 11,50,000 rupees to 7,50,000 rupees and then reducing 4 lakh rupees. So 11 lakh 50 plus 7 lakh 50 is 19 lakh, 19 lakh minus 4 lakh is 15 lakhs. So thereby this 15 lakh balance brought down at the beginning of the year 1/4/2015 is arrived at. However, we have a balance carried down 11 lakh 50,000 here. So we again bring down the balance, this balance here on 1/4/2016. So here is balance brought down 1 lakh or 11 lakh 50,000 rupees, and then we create a fresh provision by debiting profit and loss account and crediting the provision account by 4 lakh rupees here, and we carry out actual repairs, and on actual repairs we are crediting the repair account and debiting the provision account, and then we are arriving at the balance carried down by reducing the figures on the right side, the figures on the left side from the figures on the right side, and putting that balance on the credit balance here on the debit side carried down, and we bring it down again in the next year as a credit balance on the credit side as on 1/4/2017 of 12,30,000 rupees. This same balance which is here is being brought down here at 12,30,000 rupees 1/4/2017. So that's how we have drawn the provision for repair and renewal account for the years 2015-16 and 2016-17. So just as a summary of the entire chapter, as we have covered it in 4 separate sessions, we just go through the summary of it. That depreciation is the allocation of the depreciable amount of the asset over the useful life, and this allocation is made in a systematic manner. The objectives of the depreciation, why do we provide depreciation actually, is that we have to measure the income correctly, then we have to give a financial position statement. We have to arrive at the correct income is profit and loss. 2 position statement is the balance sheet, and then we have to provide funds for replacement of the assets at the end of its useful life, and we have to also ascertain the true cost of our production. So for all these things, we have to debit the depreciation, or we have to allow depreciation or the reduction in the value of the assets through wear and tear and other reasons in our accounts, so that the asset certainly does not go out of the picture and create a loss situation for us. We have to keep track of the reduction in the value of the asset in a very careful manner, and not only it will affect our income estimates and the financial position estimates, it will also help us to create funds for replacement of the assets at the end of its useful life, and it will also help us to understand what is our truly our real cost of production. Now, in the measurement of depreciation, we have to take into consideration three major factors. First is the cost of acquisition of the asset. Second is the useful life of the asset, which we estimate. And third is the estimated scrap value or whatever salvage value at the end of the useful life of the asset. We studied various methods for providing depreciation, from straight line to reducing balance to the sum of years of digits method, annuity, sinking fund, machine production units, depletion method. All these methods we have studied in detail. We have also gone through the illustrations relating to these methods. Then we have also studied that the profit and loss on sale of the tangible asset is ultimately transferred to the profit and loss account. And we also studied that the depreciation method, the residual value, and the useful life, these three things, whatever have been applied to an asset, needs to be reviewed at least at the end of each financial year end. And if there was a significant change in the expected pattern of the consumption of the future economic benefits embodied in the asset due to the changed circumstances, then we must change the method of depreciation and adopt the new residual value or the new useful life and recompute the depreciation. Also, whenever there is a revision in the estimated useful life of the asset, the unamortized depreciable amount or the unused depreciable amount or the WDV, so to say, should be charged to the asset over the revised remaining estimated useful life of the asset. So, which means thereby that the new depreciation should be calculated on the basis of the new estimate of the useful life of the asset on the depreciable amount which is remaining to be depreciated, taking into consideration the revised remaining estimated useful life estimate made by us. Now, whenever depreciable asset is revalued, the depreciation should be charged on the revalued amount on the basis of the remaining estimated useful life of the asset. So revaluation also has to be taken into consideration thereby. So there are a few questions that you must go through after revising this chapter, and that would help you to any attempt that you would make to do these questions will help you to revise the chapter, and therefore we are leaving it to you to revise it, and certainly we'll include these questions in our multiple choice question test, the mock test that we'll be doing. So having said that, a number of questions are given in form of practical questions at the end of this this document, and we'll request you to kindly go through and try those questions out at your level whenever you would like to do that. And there are some answers also given for the theoretical questions and the practical questions. You can go through the answers and the solutions which are being provided here. And in case you are finding anything which you have not understood, any topic which you have not understood, or any particular calculation that is mentioned here among the answers, please raise those either here or on the Daksh forum. You can send them to me on my WhatsApp also, or my account, so or my Telegram account, and I'll be very happy to discuss the solution of it in either the future webinars or appropriately answer them on the Daksh forum. So all of you are requested and urged to use the Daksh forum to raise your questions, to understand and discuss these topics so that you become proficient at understanding all these topics. So thank you very much for having attended this session in the early hours of today morning, and wish you a good day for today. And please join us for our next session.